Mango test. Good morning, everyone. Tuesday was not a good session for the market, I would say, overall, as we printed yet another doji. This time, though, it was a little bit more intraday wise positive because we closed higher than where we opened, but as you can see, we still closed down on the day. Um, on higher volume the day before, so overall that's not good. And if you look at the NASDAQ here, doji, 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 doji. The candles are everywhere. And today on the Russell 2000, a perfect doji almost, opening at 989, a couple of cents, and closing at 989 and a couple of cents. And that is a real doji right there. So these dojis are everywhere. S&P 500, you can see a doji today. So even it finally has a doji on the books. And the Dow Jones Industrial Average, since it opens where it closes, you really don't get to see that. Still, overall, you can see that the 50-day moving average is acting as perfect resistance. And on the New York Stock Exchange, we can't even touch the 50-day moving average. But my issue mainly is all these dojis in the NASDAQ and the doji today and the Russell 2000. I don't like what I see overall, despite the market still being an uptrend. And I hate to tell you it, I'm not a big fan of wedging lower volume breakouts. Granted, this one worked, but this is just a market I'm finding very difficult to personally adapt to. It's no skin off my back. I know to really push it heavy when the money is sitting in the corner and my methodology is working, and it worked in every uptrend from 96 into 2009, and each year it's gotten worse until this year when it's done very well. But this most latest little move up off the June lows is completely showing a negative divergence between a stock like Tesla or SPWR and my personal trading. And if you look at SPWR, you can see the same thing as you see in Tesla. You're having a breakout on absolutely no volume. Look at how below average it is overall on a day-to-day basis. Weekly, though, kind of shows that you do have a volume surge. And like Tesla, it's because the 50-day moving average is increasing, and it's averaging more volume now than what it did before May. You can see that it's increasing on a weekly time frame, but overall on a daily, this is odd movement. And on that note, because all of this weird kind of trading is happening, including new longs not working, a recent new long that was only taken in one account because of how thin it is, CCF, I'm telling you folks, this pattern right here. Granted, I made extreme note that when the volume came on Friday, it was due to end of month, end of quarter. So like I said, none of this is shocking. The trade was taken, very tiny amounts of my account. So it's not like that I'm for sure this is going to work. No, actually, if it failing does not surprise me. And CCF is failing, but not all the way. CCF is still holding above the low of 2140, which I'm giving it room to. So it is a 75% sell tonight. And another failure from that same day, VVTV. This is an amazing chart pattern, and if you have a chart pattern setting up like this and we're under a buy signal, you got a follow through day in the on IBD, which I don't read anymore, but I know a lot of people that I know read it. If you get a follow through day on there and they're in a confirmed uptrend and I'm under a buy signal and the market's got some winners and you get a chart pattern like this, you can be sure you've got a winner. Now, what is the problem with it? From the top here in June to this move here, it's not like we have a 3-week plus base, which back testing wise and in real time wise is what you want to see for one of these kind of signals where volume and BOP surge really work. Still, a pattern like this has a very high chance of success, and at the very next session it proved why. And that's exactly what you normally see from this. And in a normal market, there's an ad here, probably goes up maybe, and then a sideways a few days, another pocket pit buy signal, another ad signal. But today, nope. a full reversal of the day before moves. Not a pretty picture, and it sold off actually below where it opened on 628 of 505, a double negative. So this is also a 75% sell. Not saying that it can't firm up and move back higher, but the fact that a stock is acting like that after that pattern is not good. And another recent long, once again, was only taken in one account. It is closing below the 20-day moving average, and since it's also showing losses instead of any gains before doing that, it is not a 50% sell. It is a 75% sell. It would be a 100% sell, but the close at 826 is above the lows that I was really giving it to 803 area. You can even go as far as the 50-day moving average now that it's caught up to that area, but I'm going to give it one day to see if it can't bounce here. If it closes below 811, or you better believe that this one is going to be a full sell. And that goes with CCF. A close below the intraday low, that one's going to be completely gone. And VVTV, if it closes below 488, it is over and done with. So that will be that. But then also on another disappointing note, speaking of patterns that you just don't see turning out like this if you're in a really strong market, LOCK, look at the accumulation and all the pocket pivot point buy signals leading up to our first long signal. You get a beautiful add signal, max green bop along the way, and this should continue to work, give us another add signal. And you shouldn't have had that day. Remember on 531 when we had to take 25% of our profits and cut our losses on this because of a heavier volume close below the 10-day moving average? You normally don't see that, but still overall the pattern's fine. Then it's losing bop already before finally breaking out again. All good, but notice that bop didn't surge that a time. And now as it goes up, you can see still strong, still good. And then right after that, that Friday where that gave us VVTV, and CCF gives us this in lock. And here is how it works today. This is something you don't see in a market that's very strong. That's why it's time to be very, very, very careful out there. We would easily switch back to a sell signal with the close below the 50-day moving average, and that would be a very strong signal. That would be a 5% add to an SQQ position, a 5% to FAZ, 5% to UVXY if that happens. All right, everybody, let's see what happens in the market today. Have a happy 4th of July if I don't catch you after Wednesday session.